Well, good morning, good afternoon, good evening, wherever you are. Welcome to Breakout Trading Answer the Show, where we talk about all things breakout trading. And joining us today, as usual, special guest, Mr. Breakouts himself, Tomas Nesnidal. Welcome, Tomas.
Thank you very much, Andrew. And Mr. Breakouts and Andrew Swanscott are back. And I have a question. What happened with your background?
This is a new background. These are, what are these called? Soundproof tiles to deaden the sound a little bit because it's very noisy in this new room I'm in. So what do you think of the colors? Are they okay?
It's matching perfectly. The
So the bookshelf is gone. It's right there by the side, but you can't see it's off camera. But yeah, these are just to make the sound a little bit better. And I think they're doing pretty well, but you probably can't tell. So that's a new really background. Cool. Yeah. Yes. It's a work in progress. I think it needs something else, but we're getting there.
I wonder what the audience thinks about this new setup.
Let us know. What does it need? It needs a pop of color, I think, but I'm still working out what we can do there. So anyway, today's a very special show, actually, Thomas, isn't it? I was just thinking about this new series we've got.
Yes. So guys, we have a new series. It's going to be about how to stop losing money trading. And guys, I have to tell you something. This one is going to be a little bit controversial.
Then say that again. This one is going to be?
This one is going to be a little bit controversial.
I know. As soon as I saw the title of this one, I thought, uh-oh, here we go. You take a crack at crypto and you get all the crypto trolls in the chat. So it'll be interesting to see. Do we upset people today? Or not?
We might, Andrew, we might. Copy.
Before we get into all of that stuff, maybe you can explain the idea behind this new series, because the last series was about how to make breakout trading work, and we talked about a lot of different, I guess, sectors or markets, specifically in the futures markets, and that was very well received. We had a lot of good comments on that one. What is this new series about? Like, how did you? It's your idea. How did you come up with the idea for this one?
That's a good question. I had a couple of ideas, actually.
Did I surprise you?
Yeah, you did. I had a couple of ideas on my plate, and I think there's one truth about traders, and that is that we know that a lot of traders, they are actually losing money, and there's been a lot of statistic on this. I think it's about 80-85% of traders, they're losing money. And you and I, we've been in touch with traders for years, probably thousands of traders, and we still keep being surprised by realizing how many traders don't really understand some very, very fundamental craftsmanship behind profitable trading, and are committing quite unnecessary mistakes that hold them back from becoming successful and profitable traders. So I thought, let's have a look on this angle. Let's now explore this angle of reasons why people might be losing money, and just let's address the elephant in the room, and let's make it a little bit controversial, and and let's see what happens. So we will be talking about not losing money in markets. And I think this is a good one also for people who already trade successfully, because at least they will get some insight and understanding about what really to be careful about or what not to do to keep the profitable journey. So did that answer your question?
Yeah, it sure did. But now I'm wondering, Thomas, are you saying that once we get through all this series and I apply all the ideas that you share, I'm not going to have any more losing trades? Are we going to cut losing trades out completely?
Yes, of course, you're going to have 100% profitable trades, no losing trades whatsoever, and you will make 10,000% a day, because we will be trading cryptos, and as you know, everyone can make 10,000% a day with cryptos, right? That's been the latest greatest.
That's right. Yeah. So let's just be clear. Thomas was being sarcastic.
Yeah.
Losses are part of trade. We're going to say this, otherwise, we might get in trouble from the regulation, the regulatory authorities. But Yeah. Okay. So now you've let the cat out of the bag on what we're going to talk about first, cryptos. Why did you choose cryptos as the first one, coincidentally?
I didn't want to talk about cryptos that much because I don't find anything particularly so interesting about cryptos, and I will explain why. And I might find something interesting in the future, but not yet. But I had a quite funny story. About a month, I think it's about 2 months ago, I met a friend, a Spanish friend here, and she's a teacher. And she told me that she purchased Bitcoin. And I asked her why. And she said, because in 2 or 3 years, I will cash out and I will go to luxury vacation. And I said, what do you mean? How do you know that you will cash out with big profit? And she said, because it's going just up, everybody is buying. So everybody told me that if I buy now and I will hold it for a couple of years, then I will make some money and I can pay vacation from. And I asked her, but do you think it could also go down or you could lose your money? And she didn't even think about this possibility. She was like,
Wow.
no, it's going up. It's just going up and up and up. I was like, wow. If the most regular person who never was in touch with trading or investing whatsoever, if a complete newbie is persuaded that crypto will only and only go up, we're probably at the very top because that's been my experience in the past with gold, actually. You probably, I don't know if you remember, but about 12, 13 ago, there's been a similar wave with gold. And everybody was predicting gold to go, I don't know, to whatever, 3,000, 4,000. And then what happened then taxi drivers were pitching me gold like the best and most safe investment ever, which I knew was the top. And it was, after that, it collapsed down to 800 or something like that, or even below 800. So yeah, at that moment, I thought like, wow, that's the top. And now we'll have some massive correction. And we had a big one, and people are bleeding. And now they're asking me, Tomas, what should I do? So I was like, let's talk about it. Let's address the elephant in the room.
It sounds like a pretty good reason. We're seeing the same thing in, I guess, a lot of markets, especially in real estate here in Australia. People who've been buying up overpriced properties for years, and it only ever goes up. And now people are starting to realize maybe that's not the case. So,
Yeah.
But today we're talking about cryptos.
Right.
Here we go. I just put up the slides. How to stop losing money trading cryptos.
Now, for everyone being heavily invested in cryptos, I'm warning you, this might trigger you, because it's a disclaimer. What I'm going to share with you is not going to be a pleasant thing, but we need to talk openly about this crypto and we need to address the elephant in the room. So if you don't have stomach for that, please leave now. Disclaimer.
You've been warned.
Yes, you've been warned.
But we're doing it from a place of kindness, because we're all friends here and we want to give you some, but perhaps it's going to be tough love. I don't exactly know what Thomas is going to say today, but I think there's going to be some tough love, and
yes.
we'll see. We might start some controversy. Yeah.
As always.
All right, well, let's get started, Thomas.
Yeah. Let's have a look on the chart and let's make a quick summary of what's going on. So we had okay. I will just talk about Bitcoin because it's quite a representation of crypto market in general, and overall the correlation between other crypto markets is about 80%. So whatever is happening to Bitcoin is pretty much more or less happening to other crypto markets as well. So Bitcoin, as you can see, is down from about 70,000 down to 20,000 in just a few months, which is a massive collapse. It's a huge collapse. And I remember when when Bitcoin was touching about 70,000, I saw headline newspapers like, crypto will go up to 100,000. JP Morgan is predicting 150. All the experts were predicting going even higher forever. That was about the time where my friend, she told me that she bought a Bitcoin because it will go forever high and she will cash for her luxury vacation. And since then, we had a pretty steep collapse. Actually, I checked the price today, and during the last 5 days, we hit another 10% down, which is massive. Like, we need to understand a lot of people were heavily invested. A lot of people, from what I know, were invested even on these prices like 60, 70,000. Now just imagine you buy 60, 70,000, one Bitcoin, and in just a couple of weeks, you're down to 20. That's very painful reality. And it is what it is. It's just happening. And if you look on headlines nowadays, it looks like this on the next slide. Pretty much. We can move to the next slide, please.
Yep.
Pretty much. We're talking about crypto crisis and crypto pyramid scheme and collapse, and Bitcoin is dead, and the rise and fall of Bitcoin. And the situation is really, really chaotic. And even big advocates of crypto saying, no, this is just a correction, it will go up forever. There have very weak reasoning behind that. I cannot see any fundamental strong fact that would support that idea. Because let's face it, one of the things that we know for sure is that crypto is being massively used for illegal activities and money laundering. And I know that because I live close to Marbella, and in Marbella there's a headquarter of a lot of local mafia. And recently, one journalist, he got inside of this mafia, and he published a great article talking about the practices of all the entire mafia here on Costa del Sol. And the whole mafia is operating with crypto. That's the way they get paid, and they make transactions. So it's just a matter of time before governments will start cracking on crypto and regulating. And there are already steps taking forward. And now we have the energy crisis. And as we know, crypto mining is taking enormous amount of energy. So more and more countries are prohibiting crypto mining whatsoever. So there are pretty dark times for crypto bull trend in front of us. And I'm pretty sure that what we are going to see soon is what I call maturity, which I will explain later. And it's a good thing. I will explain why. And it's nothing new. We had it in past many times, and it was inevitable. And it's the maturity of a market is when I will start being interested as well. But before that, let's talk about next thing. So why this happened? Why it really happened that people lost a lot of money? And we need to take a lesson here, because we cannot talk about how to stop losing money in crypto unless we understand perfectly what happened here. So here on the next slide, I tried to explain what really happened. So a lot of these people who purchase crypto with this expectation that it will go only and only up forever, ideally by hundreds of % a month or a year, they call themselves traders. So I thought that we should start with some clear and very direct clarification of understanding what is the difference between trading, investing, and gambling. So trading is it's a job during which we have precisely planned entries and exits defined by a well backtested set of rules, which with active risk and trade management. So let me repeat, this is very important to understand. Precisely planned entries and exits defined by a well backtested set of rules with active risk and trade management. So that means we know how do we enter, when we do enter, and why. We know ahead what is our exit. We know ahead what is our game plan to re-enter. We know ahead quite often what is our risk-reward ratio. And we know, based on our backtest, quite often what is our overall average win percentage with this approach. Now, do you, Andrew, think that this is what people calling themselves crypto traders follow to the letter?
Not sure, it's hard to say, but I suspect the majority of people, no. They don't know why
That's
they're
my
getting in. They got no plan to get out.
Yeah, that's my that is my suspicion as well. Talking to a couple of them, like my piano teacher, great guy, really great guy, but he's been holding on a couple of cryptos for a while. Whenever we have a chat, he's got no plan when to exit. He's just crying over split milk when it goes down. But when I ask him, why didn't you exit here and re-enter there and stuff like that, he doesn't even want to listen to me. So first of all, we need to say very directly that these so-called traders, very often they're not traders. So let's move forward and let's ask a question: are they investors? So what is investing? Investing is having a quantifiable, how do you pronounce it well?
Quantifiable.
Quantifiable method to determine good value in an environment set for a long-term growth. So we basically use some model based on past experience and market behavior. And that's how we pretty much estimate what is a fair value, undervalued, or overvalued. And based on that, we make our quantified, pragmatic, rational decisions. And then, as part of investing, every investor will tell you that the key is to be diversified, because we don't know which investment will pick up, which will go up, which will stagnate, and which will go down. So even if we have a value model and we use it to pinpoint our entries and entering when the value is fair or good to invest, we still, every investor will tell you, I need to be diversified, at least among other sectors or vehicles. And there's a lot of diversification mentality behind investing. Now, again, I know some traders who already were thinking a little bit about value when it comes to crypto, and they had this in mind. So they at least did wait for a correction and bought on a correction, which is already a big step ahead from just, purchasing whenever they want. Yet very few of them, and I personally, quite honestly, know probably none of them, were diversified among other vehicles. They might have 2 or 3 different cryptos, but if they would do their homework, they would quickly realize that the correlation is about 80%. So it's not a diversification. It's 80%. It's not diversification. It's pretty much buying the same thing, just with a different label. But it's not true diversification, true essence of the diversification. So that, again, when markets crashed, then they lost a lot of money, although they probably lost a little bit less, or maybe were a little bit in a better situation than the group who was just spontaneously, without any plan, entering the crypto market. So that's investing. So again, I think very few people, I think I personally know probably not a serious trader in trading, well, maybe one. And I don't know about serious professional investor in crypto among normal population, normal herd, who is just buying without any planning. And the third category is gambling. And gambling is driven by emotions, hype, and general herd sentiment. There is strong belief in the get-rich-quick scheme. And the key drive behind this decision-making is rumor and fallacy. And this is prioritized above a specific, precise, and proven and tested plan. So there's a very strong fairy tale bias, and that's the main and only driver behind making these irrational decisions. And there's a very strong irrational belief in the growth forever. And this is what I've been witnessing mostly. I got into a couple of very heated discussions in past, where I tried my best to understand the mechanics of profitable trading. And it was in the times when crypto really went only up, and it didn't land well because most guys, they didn't even wanted to listen to me, because they had this very strong fairy tale bias and irrational belief that there will be growth forever, and that was it, like, period. We don't want to talk about anything else. We know it will go up forever, which history proven that it's never the case. And that's the gambling mentality, and we have to address this honestly. And I warned you, this is going to be controversial, but in AAA, Anonymous Alcoholic, first thing you have to say is, I am an alcoholic. And if you want to break a pattern of losing money in crypto, and you've been trading without any plan whatsoever until now, and you've been only driven by rumor, fallacy, emotions, hype, and general sentiment, you need to be at least honest enough to say, well, probably I might be a bit in this category of gambling, and maybe this was the reason why I lost money. And maybe if I know the reason, maybe that's the first step to think what I can do now to fix it or get on the right path. And again, I warn you that it is going to not be a pleasant to hear this for some people, but that's the truth. That's how I see it.
Yeah. So if you're addicted to cryptos, are you a cryptoholic, or what's the? I'm trying to think of what the term is.
Cryptoholic. Cryptoholic. Yes.
I wanted to ask you on the investing piece. So a common, I guess, approach that is talked about a lot in the crypto space is HODL, holding on for dear life. Are you trying to say that that's not an investing approach, or
holding,
a smart
like
investing? HODL, yeah, holding on for dear life.
Okay. That's a tricky one, because it depends which market we're playing with, and this can work with some very mature markets, but we need to understand that crypto is not a mature market yet. And this is another point that I really need to explain. So let me show you on the next chart, because that's a great bridge to your question, Andrew. So this is pretty much chart from the dotcom bubble, and dotcom bubble and crypto bubble is the same thing. We had so many bubbles in the past, you have no idea. If you want to learn about all the bubbles in the past, for example, read some books about the tulip bubble, which was one of the earliest and most famous one. I think it was 18 something, when people were madly investing into tulips in Netherlands, and one tulip seed could be worth I don't know, a gold, really. And that is one of the most famous crashes. And since then we had many others, and they always repeated themselves. And there's a pattern, and it keeps repeating again and again through the entire history. So this is a perfect chart where we can see the dotcom bubble and this is the blue equity curve, or not equity curve. This is the blue one. The blue curve is just overall the dotcom bubble, the tech stocks as they were rising. And there was, if you would go back in time and you would read all the titles, all the newspapers, it was same story like with crypto. Just instead of crypto, think technology companies. Otherwise, it was the same. It will go up forever. There's no way it would ever crash. There are plenty of reasons why it will go up forever. Buy it as a sure forever investment. Buy it now, because 3 years later you will pay luxury vacation. Same titles, same story. Just the vehicle was called dotcom companies instead of crypto. And we all know how it ended. It was a huge crash where a lot of people wiped out billions and billions and billions, and it was a disaster. Now, surprisingly, we're seeing almost identical copy, which is the green one, the green curve, with what's going with the technology sector right now, and it's going down. It's a little bit crushing, or it's been a little bit crushing recently as well. I think we're technically in a bull trend already. So history repeats itself, and it's the same mentality with crypto. And it happened in past many times, and it will happen after crypto. We will have another new bubble, another new vehicle. It keeps repeating the entire history. It's nothing new. And why this is important to understand, I'll explain on the next slide, because there's always same pattern. If you study these market bubbles, and I read a couple of books on market bubbles, then you will realize there's always the same pattern. The first stage is the hype. So it's being overhyped, whether it's a seed of a tulip flower in 18 something in Netherlands, or whether it is dotcom bubble, or whether it is crypto bubble. It's an overall hype where everybody saying this will go up forever, which doesn't have any pragmatical reason whatsoever. And then when every taxi driver, and nothing against taxi drivers, but where every person in the world who's got no touch, no connection with investing or trading whatsoever, starts buying these vehicles as well, you know that that everybody owns that particular vehicle already. There are no buyers left, and then there's logically the second phase, which is collapse, which we're seeing in crypto right now. And after the collapse, we have maturity, and maturity is the phase where we finally sort out all the remaining mess regarding that particular vehicle, whether some kind of manipulation, which is definitely happening with cryptos, some lack of transparency, which is happening with cryptos. The whole vehicle gets standardized, which is already happening on futures exchanges, because cryptos finally are getting standardized future contracts. And then we are entering a phase of maturity where the vehicle becomes way less volatile. It is not a gold mining anymore. It's not that it would move 300% in a year, but it's becoming a serious, pretty safe vehicle where the volatility is gone, the gambling excitement is gone, but it's finally a vehicle, tradable vehicle, where you can create a precise, specific, good trading plan and start profiting on different small moves like on any other market. And that's where, from my perspective, crypto is heading right now. And that will probably take another 2-3 years to achieve that maturity, but we're heading there. And it's a very natural phase, which happened in past with any other bubble. So that's the next thing that we need to understand if we want to stop losing money and turn the situation in our favor. So any questions regarding this?
No questions in the chat. I'm looking forward to seeing how do we stop losing money in cryptos then.
So how do you stop losing money in crypto? Well, it's pretty much 3 simple steps. And the whole introduction I did was specifically for the sake of understanding deeply why these 3 steps. So first of all, we need to quit the growth forever fallacy. We need to admit the reality of market behaviors as repeatedly proven by history. If we will be stuck on this mentality, no, it will go up forever, you're not right, this is different, we will get stuck. We will not get out of this mess. And believe me, in the past, people were saying the same thing. This time it's different. Dotcom bubble, it's different. We've been there so many times. Just do your homework, study a little bit of past market bubbles. It's just copy paste, the same thing all over again. This is nothing new. This is just history repeating itself. So you need to quit this ideology, because it honestly became ideology for many people. They're almost fanatically talking about crypto is untouchable. It only will go up. It will never go down. Well, there's no reason for that. Anything goes up and down. And we need to admit that we're in a hope mode. If you still believe this is how you recover your losses, you're in a hope mode. It's nothing more and nothing less than a hope mode. Maybe you're right, maybe not, but you need to be open to the possibility that crypto will collapse completely. Maybe will go down to 2,000 or 3,000. We saw that in the history as well, and you will lose even the rest of your money. And if you still have some money, it's a good thing, because at least you have some capital that you can now start using meaningfully and give yourself chances to recover from that with professional trading, not with gambling. So that's the first thing. It's like this Alcoholic Anonymous. We have to admit, okay, we're in hope mode. That's it. I admit that I'm in hope mode. I was caught into these stories. I was caught into these emotions. That's it. And nothing wrong on that. Many people were just humans. There's no judgment in that. What's next? So next one is damage control. So damage control starts with another honest question. Do you want to stay in the hope mode, or do you want to take a full control over your money? And full control over your money means you need to start planning, being pragmatic, learning about trading craft, backtesting, probabilities. You need to be open to learn more than just listening to experts who keep saying it will go up forever. So you need to start learning the craft about what would be your definite exit point. If you're still holding crypto, what is your definite exit point? Define it now. You need to understand that's the first step of forming precise plan. And what if you did pass that point already? Maybe you passed that point already and you're still holding on crypto. That means you're getting back to hope mode, and that's not healthy. That's addiction you're not getting rid of. That's this crypto, how you call it, Andrew? The
cryptoholic.
Cryptoholic. Then you're still being cryptoholic, being driven by emotion, greed, but definitely not rationality. And then once you control your damage, quit your position, make a quit plan where you exit your crypto, take your money, and start forming a professional trading plan. Professional trading plan starts with knowing that the odds are always in any market 50-50. So if you knew that if crypto is 50-50, there's 50% probability it will go up, 50% it will go down, what will you start differently? If you know this, if you now are out of this ideology of going up forever, and you know it's 50-50, you admitted that, what would you do differently? And now knowing that the odds are 50-50 and that the crypto market is maturing, which is, and the volatility will start to cease, would you still be so firm on cryptos only? And why? Why? Because if it's a mature market, if we're entering or maybe maturing the collapse phase, if we will have a mature, less volatile market very soon, and it is already way less volatile, the volatility is gone, why would you be so firm on crypto? Just to impress your friends? Because that's not a good reason. You need a better reason than that if you want to make money. So what would be your reason to hold on crypto? And now knowing how emotional crypto trading can be, why don't you start thinking about making another step, and that is actually automated your trading? Because crypto trading is super emotional, but if you have a firm plan, if you start trading professionally, you can automate your entire trading, and emotional impact is gone. or at least mitigated, not gone completely, but minimized, mitigated. So why not to start thinking about automating your precise, backtested, fixed rules? And once you realize that crypto is maturing and it's not the only market in the world, why not to start thinking and admitting there are other great markets to trade, which will allow you to achieve amazing diversification, and which will really help you to stay safe in other future collapses. So these are the first questions that you need to ask to start forming a professional plan. And just a side point, JP Morgan recently said that investors could that investors could make Bitcoin 1% of portfolios. 1% of portfolios, not 80%, 100% of portfolios. 1%, which is saying something. It's saying like, okay, let's get diversified over a lot of other markets. So you need to quit this crypto mentality that it is the only thing to trade, and admit there are other great markets like futures. And we dedicated entire series to futures, which can give you way better control over your trading, way better predictability and stable income instead of emotional roller coaster like cryptos.
Yeah. So in the previous slide, you talked about the third stage of maturity. What would you need to see in the crypto markets before that gets you interested in looking at this, performing a professional trading plan?
That's a great question. I think this is hard to describe in a couple of words. It's more of a feeling, because if you trade for a long time, you pretty much recognize a mature market. It's a market which goes reasonably up, reasonably down for a certain period of time without any extreme volatility bursts, without any extreme collapses, which occasionally can happen in any market. But you get a sense that this market is pretty stable. You know what your average daily volatility is. You know that your average daily volatility is the same like it was 6 months ago, and probably will be 6 months ahead as well. And you can see steady, quite reasonable movements up and down, not 10% a day up, not 10% a day down, but very normal, comparable to other markets. And then you can say, this is stable, this is mature.
Okay. So that's one of the keys then. The volatility needs to kind of match other stable markets like stocks and futures, and then you know that it's becoming more mature.
Right.
Okay. That's a good way to do it. No comments or questions in the chat right now. Maybe people are absorbing the content. And I noticed a couple of people left, so you might have triggered them.
Yeah. I want to.
Bit of tough love from Mr. Breakouts today. So I know there was another slide in your presentation there. Would you like me to put it up on the screen?
Yeah. If this is I prepared this because a lot of traders ask me recently, okay, I admit that maybe I was caught in emotional investment or whatever we call it, and I would like to learn more about professional futures trading, because I know that you, Tomas, do a lot of breakout futures trading for more stable incomes. So in that case, I also wanted to tell you that if you want to think beyond cryptos and you would like to get full guidance on how to start trading beyond cryptos with breakout strategies, professionally, with professional entries, exits plan, backtested plan, then we have a pretty complex and quite cheap workshop, which is the best way to get started with breakout trading in other markets too, so you can finally start thinking beyond cryptos. It's a professional, proven approach. You can create dozens of uncorrelated strategies in uncorrelated markets, which will be exactly the stability that cryptos cannot give you. It just works. There's no hope mode. There's full automation, no emotions, and it will give you the fastest chance to start recovering from your crypto losses. Besides, we have amazing community, breakout community, futures breakout community, and great support. So if you're interested, you can also scan the QR code and learn more. And that again could be a great way to start thinking beyond cryptos and getting into more professional and stable trading.
Yep. All right, thank you very much, Thomas. So in this chat today, you've shared a lot of great info. We talked about, obviously, we talked about cryptos, the rise and the current fall. It may recover at some stage. We talked about bubbles and the 3 stages, what to look for in crypto markets as it matures, and then the 3 steps to avoid or to stop losing money in crypto. So very complete argument there, and I'm sure it will be helpful to some crypto traders anyway. Some just don't want to know, and that's up to them to decide. So anything else you wanted to mention before we wrap up for today? I noticed there's no comments or questions in the chat right now. So
well, I realize this is a very triggering topic because people probably wanted me to say, guys, just keep your crypto. It will go to 100K. Don't worry, you will make your 300% return on investment. There will be recovery, but that would be BS. We don't know what will happen. That's the truth. And if you still are keen on listening to this version of the story that you will recover because the market will recover and stuff like that, then you're still living in the land of fairy tale. And it's really important to address it and say it openly, even if some viewers will probably hate me for that and they will not want to hear that. So guys, I mean it really, really well with you. It is tough love. It's nothing personal. I'm not trying to be against anything or anybody. I'm just trying to help and share my professional insight. So please take it lightly, but seriously at the same time.
Yeah, absolutely. So please give us a thumbs up for this video if you enjoyed what Thomas shared with us today. I think it was very helpful, puts things into context. We got a good comment here from Neil, actually. Let's put this one up on the screen. Thanks for the comment, Neil. Tough love is good, Thomas. It needed to be said. No questions from me. Everything you said is common sense. So
yes,
I agree with that, Neil.
Thank you. Yeah,
and we're ready for all the trolling in the YouTube comments. It's bound to happen, so we'll see how that goes. But okay, well, let's see. So I also wanted to say, if you've got any trading questions or comments, you can either leave them in the chat below, the comment section below, or you can email us support@bettertraderacademy.com with any trading questions, and we might cover them in a future episode. So now, Thomas, do you know what the next one is? Are you willing to share yet, or is that a secret?
I don't know yet, but I can promise you two things. First, it will be back to breakout trading and futures markets trading. And second, it will definitely be lighter and more fun topic than addressing the elephant in the room.
Okay, excellent. All right, well, thanks everyone for joining us today. Thank you, Thomas, for all this great insight into cryptos. And hopefully it's helpful for people, puts things into context.
And as Neil says, let's now go and buy some Bitcoin.
That's okay, Neil, as long as you got an entry and exit strategy. You know what you're doing.
Yeah. Exactly.
All right, thanks again, everybody, for joining us.
Thank you very much.
And we'll catch you again in 2 weeks' time on this Breakout Trading Answered show. I had to think about that one.
And how to stop losing money.
How to stop losing money series. Excellent. Thanks for the help, Thomas. All right, cheers.
Thank you.
Happy trading.
Cheers, happy trading.